Gold price plunges as Middle East tensions ease. If you're new to our channel, then subscribe and stay connected with us by like, comment, and share this video. Gold price dips vertically after failing to recapture the crucial resistance of $2,400 in Monday's early American session, driven by less safe haven demand as Middle East tensions ease. No further escalation in tensions between Iran and Israel has provided some relief to dismal market sentiment. Also, markets are increasingly pricing out the possibility that the Federal Reserve will lower interest rates in the June and July meetings, further weighing on gold. 10-year U.S. Treasury yields rise to 4.66%. Yields on interest-bearish assets, such as U.S. bonds, rise on firm prospects that the Fed could be a laggard in pivoting to rate cuts compared with other central banks from developed nations. Higher bond yields, in turn, weigh on non-yielding assets, such as gold, as they become a less attractive alternative to invest in. This week, the United States Core Personal Consumption Expenditure Price Index data for March will likely move bond yields and gold prices. As the Fed's preferred inflation gauge, PCE data could shift expectations of when the U.S. central bank will start lowering interest rates. According to the CME FedWatch tool, markets currently expect the Fed to make the move at its September meeting. Meanwhile, the U.S. dollar index, which tracks the U.S. dollar's value against 6 major currencies, consolidates in a tight range around 106.0. Gold is a dollar-denominated asset, so a firm U.S. dollar tends to keep its price under control. Going forward, investors will focus on the preliminary GDP data, which will be published on Thursday. The U.S. economy is estimated to have expanded by 2.5%. Strong growth exhibits robust consumer spending and higher production, which translates into higher price pressures. Higher GDP numbers would allow the Fed to keep interest rates at the current high levels, which will eventually improve the U.S. dollar's demand. Daily digest market movers. Gold price turns vulnerable while U.S. yields rise. Gold price tumbles to $2,330 after refreshing all-time highs near $2,430 as safe haven demand diminishes. Investors are less worried about further escalation in Middle East tensions. On Friday, Tehran's air defense said it destroyed a limited drone attack by Israel and confirmed no harm to nuclear facilities in the central region of Isfahan. Iran didn't announce any plan for an immediate retaliation, so investors see no major escalation in the short term even as tensions between both parties persist. The precious metal comes under pressure after 5 weeks of gains as risk sentiment improves. The recent inflation data have dented Fed policymakers' confidence in inflation declining to the 2% target, with many of them saying they want to maintain interest rates higher for a longer period. Gold price plunges to near $2,330 after retreating from $2,418. A mean reversion move is anticipated in the yellow metal, which will drag it to the 20-day exponential moving average at around $2,315. Usually, the asset reverses to the 20-day EMA after a sharp rally. However, the move is generally considered a correction, not a bearish reversal. On the downside, April 5 low near $2,268 and March 21 high at $2,223 will be major support areas. The 14-period RSI cools down to 64.40 after turning extremely overbought. The overall outlook for the asset remains strong if the RSI shifts into the bullish range of 60.0–80.0. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.